Monday, October 20th, market analysis, Stan Ehrlich. I start out with stock indexes, go to futures and also some stocks and market commentary in general to begin with. Another pretty strong day. Now we're getting very close to the historical highs in some of these indexes. And now I'm beginning to think the low that we had on October 10th just might have been the October low, and I didn't see it at the time. But if we start closing at new historic highs, that's exactly what it's going to look like. And it's very unpronounced, very relatively, that is, insignificant compared to many of the previous October lows in the last 30 years plus. Nevertheless, you get what you get. And that could have been the October lows. But I'm not sure yet. Only if we start closing at new historic highs. Otherwise, we could still develop more of a top and see lower lows than the low, strangely enough, on the same day, October 10th, because it's such a huge range. All right, this is the E-mini, up pretty good. New high close for about 6 days, 6 or 7. Not a new high close and not a new high historic yet. And there's the 1-minute chart, actually 5-minute chart. The spider left a gap behind. Interesting. Usually gaps are closed. So I do expect it to come down at least to the low, the high of Friday, and then we'll see. Gapped up, 5-minute chart, no new high close, dangerously close. We have maybe a new high close. It's super close to the closing highs on October 8th and October 9th. But it's not a new high for the trend, although it's very close on the QQQ. But it left a gap behind. Gaps are almost always closed. We'll see what happens when it closes the gap. And we're not close to being overbought in any of these indexes. Next, 5-minute chart for the QQQ. Super close to historic highs. Doesn't quite make it. Prime target for a double top. Who knows? Let's see what happens. Then you would call this an exhaustion gap in the spider and the Qs today, if that's what ends up happening. NQ futures contract approximately equal to the previous historical high closings, but not above the previous historic highest highs. And the 5-minute chart shows you that in detail. Next, we've got a nice rally also in the YM, as you would expect. New high close for approximately 6-7 days, but not a new high close, close, and not a new historical high, close. Excuse me. And there's your 5-minute chart, stalling out toward the end of the day a little bit. Next, we have the Russell. Not quite as strong, as quick, as fast, and a little bit further away from the all-time highs, which were on October 15th in the Russell, not October 10th. And here's the 5-minute chart. So it's got a little bit more to go. The bond market, equal to previous closes, maybe a tick or two higher, not higher than the high of Friday, which was overbought. And Friday did make a new high for the trend, but the closing price was terrible. So this is just a little bit of a bounce back. I still think bonds have a good chance of working below today's low, yesterday, Friday's lows, and the day or 2 or 3 or 4 before that, and maybe even coming down to about 116. Notes, overbought, double top possibilities. Need to see more weakness. I think we're going to see a little more weakness. Excuse my cough. Next, we have an oversold condition for the 3rd day in a row. Crude oil. We have an outside trading range, but it closed a little bit lower, not much. This looks like possibly one of my bass-backwards reversals, meaning that this is actually bullish. I don't see very many of these. I don't have a historical tally of how many worked and didn't work, etc. Statistics, I've just seen too many of these to completely ignore them. I have to still be bearish because it was a lower close and the trend is down and I don't see any reversal, but it came so close, and it is one of my possible bass-backwards reversals. So I'm going to wait a day or two. Closing higher than today's high would cause me to believe that this is one of those reverse reversals, so to speak. Otherwise, we're going to see new lows. Crude oil, natural gas, gapped up. No change in the long-term head and shoulder pattern. Didn't expect it to be this strong this quick, but it bumped up against resistance and the gaps are almost always closed, so I am looking for it to come back down to 3.022-ish this week. Next, heating oil, doji inside day, but oversold for the first time on Friday, and today we didn't quite make it to oversold, so we could be turning up, but look, you've got a resistance line just a little bit overhead, and you've got another resistance line at the bottom of the previous wedge or pennant or right triangle, whatever you want to call it. So there's a lot of resistance above. I'm thinking it'll stop at the resistance on a little bit more of strength and then turn into new lows. Trend is down. The huge bearish engulfing sell signal on gold on Friday, I think was broken just by a hair. We got above Friday's high. I still like the fact that it's super overbought with bearish engulfing, and I'm trying to maintain a bearish stance here. But it's difficult with such a strong close as well as a new historical high by just a squeak. Now, the bearish engulfing in silver on Friday, we did not even come close to the high of Friday. So I'm still drop dead bearish on silver. So I do think both of them are going to start to slip. Platinum didn't have a reversal on Friday, but it came close, and the rally today was no big deal. I'm looking for lower levels across the board in precious metals, gold, silver, platinum. So looking for it to make lower lows, probably to a minimum 1534, and very possibly to a little bit better support level of 1467-ish. Now, the bearish engulfing on Friday on copper was broken because we got above and stayed above and closed above the high of Friday's bearish engulfing red sell signal. So that one didn't work. I thought it was going to. I am bearish on copper. Again, sometimes these are part of the topping out formation and not the highest high. I'm going to go neutral at the moment in copper, just flat out neutral. New high close on soybeans. Yay! Grain markets are acting pretty good lately. We're not overbought. We have room to go up some more, and we need to get above 1053, and then most importantly above 1063 in order to look at this as a potential significant longer-term bottom. Soybean oil has broken and stayed above a bear trend line. This could be, it's not very aggressive, a breakout of the previous downward slanting channel, which challenged support in oversold condition and turned right back up again. I'm liking the way soybean oil is acting. I just wanted to close above last week's highs. Also, soybean meal is now overbought for the first day and came up above and stayed up above a resistance level that it had trouble getting above twice before in the last 2-3 weeks. So that's progress. I like that. Now I'm looking for a challenge of 290-ish, and the most important recent top is 298. So basically 300 and up would be quite bullish for soybean meal probably. Corn, another a little bit higher close, not a new high. Resistance is still stopping it, but after a little bit of a dip, it came back to close a little higher. I like what I'm looking at. I'm still friendly on corn. I'd like to see more evidence on stronger closes, like some of the beans, oil, and meal are starting to do. Wheat, we've got a break of a major bear trend line, but it closed at the trend line. Not quite good enough. I want it to close above the trend line and hopefully tomorrow or the next day, very soon, above today's highs and on a close. Okay, now we're looking at Apple. Gapped up. I know it's a new high close and all that good stuff, but gaps are almost always closed. So we'll see what happens as it comes down and back to 253 and a half-ish to close the gap. Friendly on Apple because the trend is up. It's stayed up closed up, not overbought yet. So come down, close the gap, and then we'll see what happens. We did not gap up on Tesla. We still have a bearish engulfing sell signal on the top of the market, but it is climbing back up. So I'm going to stay neutral momentarily on Tesla to see how it handles this resistance level and what it starts to do. But I'm basically bearish simply because of the bearish engulfing sell signal that worked a little bit, not that great. There are also gaps to close below the market. So I'm basically a little bearish, but I'm going to not be very aggressive about that. Resistance is stopping the rally on NVIDIA. Approximate unchanged close. Bearish engulfing at the top of the market on the high day. Still looking for lower levels. Probably going to test support at 171-ish down to about 164. But I'm really looking for something lower, probably 153. Next, huge gap a couple of weeks ago in AMD. Today we did make a new historical high, pulled back a little bit, but closed pretty firmly, except it didn't close above the previous rally high, which was only Thursday of last week, and it's overbought. Maybe this is the beginning of a dip to come down to close that gap, which would be all the way to 170. Now that's from 240. And we're back to the E-mini. You guys have a great day and profitable trading to you.